Greetings everyone. Welcome to this session of previous year question papers discussion. Dear aspirants, in today's session we are going to discuss about the Indian economic section of Prelims 2014. So we will do all these PYQs year wise and we will discuss last 12 years PYQs topic wise. Right. In other sessions we have discussed quality PYQs. In this session we are going to discuss about the Indian economic section year wise. Right. And if you have analyzed the previous year's question paper, right, then you will see that on an average 9 to 19 questions, right, from 2014 to 2025, right, if you analyze the previous year question papers from Indian economic section, you will find that on an average 9 to 19 questions has come, right. So in 2014 there were 9 questions, right? And every year the number fluctuates, but this section means Indian economic section plays a significant role in the in qualifying prelims examination, right? So we will discuss year wise. Now let's see the first question. It says the main objective of the 12th 5-year plan is. So this question is from 2014, and if you have studied economy, you must be knowing that since 2017 5-year plan in India has been discontinued. Currently we don't have any 5-year plan, right? So 2017 was the last 12 5-year plan, right? Means from 2012 to 2017 it was 12th 5-year plan and last 5-year plan in India. Currently we don't have, it has been discontinued, right? So but the question came in 2014 and that time it was 12th 5-year plan, right? So it says the main objective of 12th 5-year plan is inclusive growth and poverty growth. Be careful here, it says poverty growth. So can you imagine that our government will plan for poverty growth? It will never, right? It will always try to reduce poverty, not it will aspire for poverty growth. So this is the wrong option. Next, inclusive and sustainable growth, though it is closer to the main objective but not the exact objective, right? So this is not the right answer. Next, sustainable and inclusive growth to reduce unemployment. This is also close to the main objective but not the main objective. Last option, faster, sustainable and more inclusive growth. Yes, this is the right option, right? Means the main objective of 12th 5-year plan was faster, sustainable and more inclusive growth. Clear? So here is the explanation. You can read, you can pause the video and you can read. Now next question. Again it is a simple question, I would say. Why simple question? It says what does venture capital mean, right? So what is the meaning of venture capital? If you have studied economics, right, then you must be knowing what is the meaning of venture capital, right? So let's read the option. First option says a short term capital provided to industries. See, whenever there is venture capital, no, it is always long term, right? Not short term, long term, minimum 5 to 10 years. It can be extended for more period, right? But minimum 5 to 10 years. That's why venture capital is always a long term investment, right? It says short term, so incorrect. Second, a long term startup capital provided to new entrepreneurs, right? As I said, it is a long term investment. See what happens that whenever, for example, person X, right, is an entrepreneur, right? So another investor, for example A, B, C, they want to invest in his or her company, right? So they will invest in the company of X, right, for a longer period, and that is called venture capital. That is the simple meaning of venture capital, right? So it says long term startup capital provided to new entrepreneurs. Clear? So this is the right option, but read other options too, as I suggest. Even if you have found the right answer, you should read all the other options, right? It says funds provided to industries at times of incurring losses. No, as I said, it is a investment in any other, especially entrepreneurs business, right? D says funds provided for replacement and renovation of industries. No, right? So you can see B is the right answer. Clear? Here is the explanation. You can pause the video and you can read. Now, next question again. It says terms, right? See, in economy, terms are very important, right? You should know the meaning of terms. For example, in the previous question, right, second question, we have seen the meaning of venture capital. Again, it is related to terms, right? Concepts. In economy, concepts are very important, right? You must clarify your concept. Be very specific. So it says the term marginal standing facility rate and net demand and time liabilities sometimes appearing in news are used in relation to. So simply the question is about that the terms marginal standing facility rate and net demand and time liabilities are related to what? First, banking operations, right? Second, communications networking. The answer is no, right? Completely irrelatable. Military strategies, again, no relation. Supply and demand of agricultural products, again, no. Basically, it is a banking related term and it is related to banking operations, right? See, what happened? What is marginal standing facility rate? Right? It simply offers the commercial banks to take loans over the night from RBI, right? That is the simple meaning of, or simple definition of marginal standing facility rate. Net demand and time liabilities, nothing but total demands and total liabilities or net liabilities of commercial banks. Clear? So both are related to banking operations. Here is the explanation. You can pause the video and you can, I'm just reading for you. As I said, marginal standing facility rate, right? It is emergency borrowing rate at which scheduled commercial banks can borrow overnight from the RBI. Clear? Against approved government securities, usually, and it is always remember that usually it, from their SLR, statutory liquidity ratio, right? When interbank liquidity completely dries up. And one more thing you have to remember that it is always means MSF rate, right? Marginal standing facility rate is always higher than repo rate. But how much? It is 0.25% higher than repo rate. Clear? Next, second, net demand and time liabilities. As I said, it is nothing but total net liabilities of a bank and calculated as the sum of demands of liabilities and time liabilities payable after a fixed period minus interbank liabilities and certain exemptions. Clear? Now moving towards the next question. Fourth question. Right. See, that time it was in news and that's why UPSC asked the question. So again, in economy, current affairs are very important, right? Be updated. Do not skip the current affairs is from economy section. So it says what is or are the facility or facilities the beneficiary can get from the services of business correspondent bank sathi in branchless areas, right? Especially in rural areas or bankless areas where there is no bank or no other banking facility, right? So RBI initiated a facility known as what? Bank sathi or banking correspondent, right? So what are the facilities it provides? So it enables, first statement says it enables the beneficiaries to draw their subsidies and social security benefits in their villages. Yes, obviously, right? So it functions like banks, right? But these are small units, mostly shopkeepers, right? SHGs or any private individual becomes or can become bank sathi or banking correspondent. He or she can open just a small facility, right? Especially in non-banking areas, right? Even in or rural areas, right? So it enables the beneficiaries to draw their subsidies if they are getting any kind of subsidies from government, or social security benefits, for example any kind of pension or any kind of or you can say benefits, monetary benefits from government, they can withdraw from here. Second statement, it enables the beneficiaries in rural areas, as I said, it is open in generally non-banking areas or rural areas, to make deposits and withdrawals. Obviously they can withdraw and withdraw in their banking accounts, right, or from their banking accounts using this facility. So this is also correct. So go for option C. Both are correct, right? And one more thing I would like to tell you, that this facility was initiated, or Bank Sathi or banking correspondent was initiated in which year? 2006, right, by RBI. This was an important fact. Simple. Next, fifth question. In the context of Indian economy, which of the following is or are purpose or purposes of statutory reserve requirements? Clear? So read the options. First statement, it says to enable the central bank to control the amount of advances the bank can create. Right? See, statutory reserve ratio requirements, right, includes two instruments or measures, you can say. First is CRR, cash reserve ratio, and second is SLR, right, statutory liquidity ratio, right. So under CRR, cash reserve ratio, a fixed percentage of cash has to be maintained with RBI by the commercial banks, right, and under SLR, a fixed percentage of liquid assets, right, liquid assets, for example, that can be converted into cash, government securities, golds, or any other types of securities or bonds, that has to be maintained by the banks with themselves, and both are nothing but instrument under statutory reserve requirements. And here RBI using these two, CRR or SLR, right, RBI tries to control the funds of commercial banks, right. So first statement is correct. To enable the central bank to control the amounts of advances the bank can create, means how much, means to create the funds or to manage, you can say, the amount of advances by the bank. RBI applies these two instruments or uses these two instruments, CRR or SLR, and both comes under statutory reserve requirements. First statement is correct. Second, to make people's deposit with banks safe and liquid. This is not correct. Why? Because, right, see, there is one condition that is called insurance credit guarantee scheme, right, in ICGS, insurance credit guarantee scheme. It simply means the amount of the account holders in any bank, right, or their amount is safe. How? Up till currently it is rupees 5 lakh, 5 lakhs, right. So if your amount, right, if you have certain amount, deposit certain amount in any bank, right, your deposited amount, right, whether it is more than 5 lakh or less than 5 lakh, it is secured up to 5 lakh, right. It means, for example, if you have deposited 1 lakh, right, or the bank fails, for example, there is bank known as X Bank of India, right, and that bank fails, that time your deposited amount was 1 lakh, and under this insurance credit guarantee scheme, RBI will provide you your 1 lakh, right, in for your deposited amount. But for suppose your deposited amount was 10 lakh or 1 crore or whatever, but you will get only up to 5 lakhs. So here statutory reserve requirements are not used to make or people's deposit with banks safe and liquid. This statement is correct. Incorrect. Third statement, to prevent the commercial banks from making excessive profits. No, there is no such rule, right. Fourth, to force the banks to have sufficient world cash to meet their day-to-day requirements. Again, no. The purpose is what? to enable the or to control the advances the bank can create, means how much money they can offer for loan or offer as loan to public or even corporate world, right? It is controlled by this instrument, statutory reserve requirements, and under this two instrument, CRR, cash reserve ratio, and SLR, statutory liquidity ratio, right? So only one statement is correct, so go for option A, right? Now next question, sixth question, it says, with reference to the union budget, which of the following is or are covered under non-plan expenditure, right? Again, here I would like to tell you that this division between non-plan and planned expenditure, right, has been discontinued since the budget of 2017-18, right? Why? Because till in the first question we have seen that 12 5-year plan, 5-year plan, right, was discontinued since 2017, right? And till 5-year plans existed, expenditures of or expenditures in the budget were categorized into two categories, planned and non-planned expenditure. Currently there is division between two categories, that is called revenue expenditure and capital expenditure, right? Currently it does not exist, but this question came in 2014, so we have to discuss. Clear? So under non-plan expenditures, option first statement, defense expenditure, yes, it was covered under non-plan expenditure. Second, interest payments, obviously it was also covered. Third, salaries and pensions, obviously it was also covered. And fourth, subsidies was also covered, right? Subsidies on fertilizers or any kind of subsidies provided by the government, right? So you can see all the statements are correct. Go for option C. 1, 2, 3 and 4 are correct, right? And again I would like to tell you that this has been, means the categorization between two categories, plan and non-plan expenditure, has been discontinued, right, with the discontinuation of 5-year plan, right? And currently expenditures are categorized into two categories, revenue expenditure and capital expenditure. Simple. Now no need for further explanation. Go for seventh question. It says, with reference to balance of payments, which of the following constitute the current account, right? So which of the following are constituents of current account? Simple. So first is balance of trade. Yes, it is always related to balance of payment. Foreign assets, no, right? Third, balance of invisibles. Yes, this is also correct. Special drawing rights, no, it is related to IMF, not balance of payment, right? So only you can see first and third statements are correct. Go for option C, right? Now explanation. So what is balance of payment? So balance of payments is a systematic record of all economic transactions between a resident of a country and the rest of the world over a period, right? Generally 1 year. And as per RBI and IMF guidelines followed in India, balance of payment compilation, it has two main accounts. First, current account, and second, capital account, right? So under current account records transactions involving goods, services, income, right? For example, investment earnings, unilateral transfers, right? Remittances, when someone or when an Indian working outside India, right, sends the amount. For example, a person X is working in USA, right, he will definitely send what, dollars to India, that is called remittance. Vice versa, any foreigner who is working in India, right, and he is or she is sending certain amount to his or her country, then it will be considered as remittance for that country, right? So that is current or ongoing flows without creating liabilities or asset. Capital account, so generally current account does not create any kind of liabilities or asset, but capital accounts, here from the name it is clear, so it generally creates assets and liabilities, Clear? So balance of trade, obviously this was correct. Second, foreign assets, not, I have told you already. Third, balance of invisibles, obviously it is correct. Why? Because it refers to the net balance of invisible transactions, non-merchandise, including trade in services, income, unilateral transfers, together with balance of trades, right? And lastly, fourth statement, special drawing right, it is related to, as I said, IMF, right? Now, eighth question, again straightforward question. If you know, then it will take hardly few seconds. It says, which of the following organizations bring out brings out the publication known as World Economic Outlook? So, which of the following organization publishes this World Economic Outlook report? So, correctly, the answer is International Monetary Fund, right? No need to go for here and there, right? So, simply you have to remember World Economic Outlook is published by or bring out by International Monetary Fund, IMF. Clear? So, what is it? So, World Economic Outlook is a flagship publication of IMF, Indian Monetary Fund, and you have to remember that it is published biannually. Biannually means 2 times in a year, right? Once in April and second in October. So, it is published twice a year, biannual. It is a biannual report. Published by whom? IMF, International Monetary Fund, and with interim updates in January and July. Prepared by IMF's research department, and it provides this, right? You can pause the video and you can read. Next, last question. If here you have to apply your logic, and again in economics you have to apply your logic, right? Your concept should be very clear, as I said earlier, right? So here you have to apply your common sense. It says, if the interest rate is decreased in an economy, it will. So in economy, impact related, outcome related questions are given. So if interest rates is decreased in an economy, any economy, what will be the outcome, right? So it will first decrease the consumption expenditure in the economy. The answer is no, right? See, whenever the interest rate is declined, right, loans become cheaper, right? Just an example, for example, earlier the rate of interest was 8%. If it is decreased to 5%, obviously loans will be cheaper, right? Loans will be cheaper means what? Corporate world or even individuals, they will take loan, and when they will take loan, obviously they will do some kind of investment, right? Mostly corporate world, they will invest in, right? So second statement, increase the tax collection of the government. No, it will not increase the tax collection of the government. Third, increase the investment expenditure in the economy. Yes, as I said, when loans are cheaper, obviously, or interest rates are cheaper, people or corporate world go for loans, right? And obviously when they take loan, it will increase the investment expenditure in company, right? Right? And again, in last option, that is called increase the total saving in the economy. No, it will not increase the savings in the company. So whenever the interest rate is decreased, it increases investment expenditure in the economy. C is the right answer. No need for further explanation. So in this video, we have explained 2014's economy section. Thank you.